Hey folks, welcome back. In this video, we'll introduce you to the basics of Bitcoin, which is the world's first cryptocurrency. So what is Bitcoin? At a high level, it's a digital currency or a cryptocurrency or crypto for short. It is the first mass application of blockchain concepts, meaning it's built on top of a blockchain. What is it used for? Although there's a lot of debate around this, here are basically the things that Bitcoin is used for. First, anyone can send Bitcoins to anyone else easily using a computer or even a smartphone. It's a bit like sending an email. When one person sends a Bitcoin to another person, they are essentially sending the amount of money, example in US dollars, that a Bitcoin currently trades for on an exchange to that other person. More on this later. Second, the beauty of a Bitcoin transaction is that it can take place between individuals in different countries without much hassle at all. Finally, and this last one is interesting, where investors are starting to view Bitcoin as a store of value, like gold except in a digital fashion. So they're treating it more like digital gold. We'll get into this in way more detail in some of the later videos as well. What are Bitcoin's strengths? We touched upon this briefly in the previous slide, but let's look at these strengths in a little more detail. First, it's super easy to send Bitcoin from one person to another. Second, by utilizing advanced innovative technology, Bitcoin is structured in such a way that it's virtually impossible to counterfeit it. Finally, and this is important, Bitcoin transactions do not require any central authority like a bank. A network of computers essentially plays that role. Next, let's take a deeper look into how a Bitcoin transaction works. There is this awesome infographic on the topic that I found really useful. A link to it is provided in the video description. Let's say Alice wants to buy a bike from Bob, an online retailer who accepts Bitcoin as payment. This is what the transaction flow would look like. First, Alice and Bob both have Bitcoin wallets or programs installed on their respective computers. Second, Bob generates an address, like an email address, from their wallet that Alice will send the Bitcoin to. Then, Alice asks her Bitcoin client, which is also a program on her computer, to send the requisite Bitcoin amount to Bob's address. The client performs the transaction, which is essentially a digital statement saying Alice sent X Bitcoins to Bob and passes this information to the Bitcoin network. This is where the magic happens. The Bitcoin network consists of miners, basically people, companies, or entities with powerful computers that compete against each other to see who can confirm this transaction by writing it to the Bitcoin blockchain the fastest. The first to do so wins a certain number of free Bitcoins. So that's the economic incentive for a miner to confirm a transaction. Once written into the blockchain, the transaction is confirmed and based on the properties of the blockchain, essentially unchangeable. At this point, the Bitcoins have gone from Alice to Bob. All right, no discussion on Bitcoin is complete without going into its weaknesses. First, let's talk about the transaction fees. The transaction fees for a Bitcoin transaction hit all-time highs as people piled into it in December of 2017, and the infrastructure struggled to keep up with the demand. Since then, the fees have dropped dramatically due to reduced demand and also infrastructure enhancements that have been made. Second, Bitcoin transactions take a long time, and this time increases as more people use the network. Basically, all of this can be summarized into two words: scale problems. As more and more people use Bitcoin, the underlying infrastructure becomes slower and more expensive. Having said that, there are initiatives in flight to solve for these problems, the most anticipated being something called the Lightning Network, which we'll cover in the future. For now, There are links to articles on ArsTechnica and CoinCentral, which we've provided in the video description, that go into more details in case you're interested. To recap, these are the key concepts that the video covered. First, cryptocurrency. Second, Bitcoin. Third, wallets. Fourth, addresses. Fifth, transactions. Sixth, mining. If you are unclear on any of these, I highly recommend going back through the video again. With that, signing off.